My dear and respected students, this is Suresh Babu with one more video presentation of today, 7th January 2023. Let me remind you the importance of this video. Previous video, which I have uploaded yesterday, I did see on an average students watching for a period of 4.13 seconds. But the video was made for approximately some 15.80 or 40 seconds, if I'm not wrong. So what is the gap? Approximately 10 minutes average gap. So it implies that most of the students, for name's sake, 2 or 3 minutes, you are watching it, not making the notes, not preparing. It shows the negative aspect in each of you, those who are not watching completely. Don't ever underestimate the effort which is being applied by a teacher in making this wonderful video. If you don't value the good things in the life, naturally, it is the waste of time and money to discuss about the goodwill. See, we are dealing with the goodwill valuation. When suppose as students, we don't possess the goodwill, the will that is supposed to be good in us, how can you in future go ahead and calculate a firm's goodwill? Tell me. Don't feel otherwise, please. Hence, your duty is pick up the pen and the notebook, start writing it. Let me share the screen of today's. This is the 8th sum. So, cursor moment, note it, right? Average profit method using weighted average. In the question paper, in the problem, that is the during examination, this they will not mention. Here to assist you only it is mentioned. Gary Limited proposed to purchase the business carried on by Success. Goodwill for this purpose was agreed to be valued at 3 years purchase of the weighted profits, average profits of the past 4 years. So this is multiplied by 3 years. Weighted average profits of last 4 years. The appropriate weights 1, 2, 3, 4 respectively, 12, 13, 14, 15. The profits 81,000, 95,000, 1,20,000, 1,50,000. Please open your eyes and look at, right? Then, on a scrutiny of the account, the following were revealed. First one, on 30th 9, 2013, after 6 months, right? A major repair was made in respect of machinery incurring 20,000 rupees, which amount was charged to revenue. Hence, in 2013, this 20,000 rupees is to be added back because it was reduced earlier by mistake. The said sum is agreed to be capitalized. That is the reason why we have added goodwill. Calculation subject to adjustment to depreciation of 10% per annum by the reducing balance method. So that means in 13, 14, right? right? Is it correct? Yes, 13, 14. First, what you would do, minus, sorry, plus 20K, right? Plus. In the same year, 13, 14, depreciation is to be charged, okay? Same year. How much? 20,000, 10% means 2,000 per year, correct? 6 months means divided by 2. You get 1,000 rupees depreciation to be subtracted, correct? In which year? 13, 14. In 14 and 15, what is to be done? Now, how much is available? Out of 20,000, 1,000 minus, you get 19,000, that is 19K. In that year, full year depreciation has to be charged. How much? 10% means 1,900 to be subtracted. Then the closing stock for the year 2012-13 was undervalued by 5,000 rupees. So 12-13 closing stock becomes 13-14 opening stock. In 12-13, it is to be added. 13-14, it is to be subtracted. Simple. Overvaluation addition, undervaluation subtraction. Correct, no? So that is the reason why when it is undervalued, the profits were shown less. Then to show appropriate, add it in which year? 12-13. But next year, the same closing stock becomes opening stock. Here it is added, okay, in the previous year. In the next year, it is to be subtracted, okay. Then, to cover management expenses, an annual charge of 10,000 rupees should be made for the purpose of valuation of goodwill. Compute the value of goodwill of the firm. So that means each year minus 10,000. This is the adjusted profit. See what I have explained, the same thing. In the first stage, what is that? Calculation of what? Instead, what I do, I'll write here, type it. Calculation of adjusted profits. Sorry, profits. Correct? This is the first step. This is what we have done. Kindly check here. See, statement of adjusted profits. Profits given 11, 12, 12, 13, 13, 14, 14, 15. Add capital expenditure 2,000, 13, 14, 20,000. Less depreciation, here 1,000 rupees, here 1,900. I've already explained this. Undervaluation of closing stock, which is to be added here. Yes, it is to be subtracted in the next year. Management expenses, minus 10, minus 10, minus 10. This is plus, right? This is minus. That's it. So now you get adjusted profit 71,500, 90,000, 1,24,000, 38,100. Okay. So though the profits are fluctuating, correct? But in the problem itself, what did they suggest? And that is weighted average profit, they said. Actually, weighted average profit is not applicable here. Why it, oh, it is applicable? Sorry, 1,38,100. No, I'm sorry. It is applicable. Correct. It is applicable because increasing. So what I have to do, this I have to remove. Correct. I'm sorry. No. The profits are increasing. Correct. The method is right. So 1, 2, 3, 4 adjusted profits, right? So now multiplication to 71, 1,80,000, 2,72,000, 5,52,000, 411 lakh, 75, 400 divided by 10. You get 1,17,540. This is adjusted profit of first year, second year, third year, fourth year, right? Now see, total product divided by total weights is the weighted average profits. This is the second step, right? Now the third step is valuation of goodwill. How much? Weighted average profit into number of years of purchase. 1,17,540 into 3,52,620. Okay. So that means we have covered. So this particular sum, if I come to class and ask, right, eighth sum, what is to be done? All the amounts. Now I'm typing it. Okay. Homework. Next, if I come to class and ask the students whether you have done double the figures, all the figures, these amounts, do the sum. That is a homework. You will better understand, otherwise you will never understand. Yes. Next, let us see. What is this method? Second method, capitalization method. First method, average profits method. Now it is capitalization method. What is capitalization? Capitalization method can be divided into two types. One is capitalization of average profits and capitalization of super profits. Okay, let us see the steps. Steps for valuation of goodwill under capitalization of average profits method. There are two methods now. The first one, A, we are dealing with. Now, calculation of adjusted average profit. The first step is same, right? Same. Then, second step, calculation of total value of the business. This is the second step. How do you get the total value of the business? See, total value of the business is adjusted average profits divided by normal rate of return into 100. Now the formula is changing here. Previous method and this method. Second method, there it was calculation of adjusted average profits. Now, what is that we are doing? So we are doing adjusted average profits divided by normal rate of return into 100. I'll explain this. Okay, so first listen. So this is adjusted average profit divided by normal rate of return into 100. For example, adjusted average profit, let me write here, 1 lakh. Okay, what is this? 1 lakh assumption, right? Divided by normal rate of return, let us see, 10%, 10 into 100. Okay. Now, how much is the total value of the business? 10 lakhs. That is 1 million. Understood? 10 lakhs. Now, from this, what is to be done? Calculation of goodwill. The goodwill can be ascertained by deducting the net assets of the business, that is, assets minus liabilities or capital employed from the total value of the business. So how do you get the goodwill? The third step, assumption. How much we got? Total value of the business. I will write total value of the business, TVB, minus, I write here, net assets. Okay, net assets or capital employed. Okay, total value is 10 lakhs. I will write lakhs minus. We'll assume net assets in this business is 8 lakhs is equal to 2 lakhs is what? Goodwill. This is just example. Listen. Okay. So this is the first method. What is this? Capitalization of average profits. Please write in the using the notebook and the pen. This is very, very significant. right? Now look, the second method, B. Under the B capitalization of super profits. First and second methods are same. The third step, first and second steps are same. Third step changes here. Valuation of goodwill. Super profits divided by normal rate of return into 100. That's it. Super profit divided by normal rate of return into 100. See what is common here. See the denominator, nominal rate of return multiplied by 100. Here, nominal rate of return multiplied by 100. Correct now? In the first A method, numerator is adjusted average profits. But here in the B method, numerator is super profits. Okay. So please learn and come. Yeah, very simple sum is available. Let me finish this. Problem number 9. Okay. Net profits of a company for the past 5 years were 40,000, 45,000, 47,000, 40,000, 48,000. The capital employed, okay, net assets in the business is how much? 4 lakhs. Remember this. On which a reasonable rate of return? Reasonable rate of return is normal rate of return is 10%. Okay, na? Is expected. Calculate the value of the goodwill of the company under the capitalization of average profits method. First method, that is point A. Correct, no? So calculation of average profits. Total profit divided by number of years. 220 divided by 5. How? 40, 45, 47, 40, 48. So if you total it, you are getting 220. How many years? 5 years. So now you get 44,000 average profit. Okay. Next calculation of the total value of the business. So average profits divided by normal rate of return into 100. How much is average? 44,000 divided by 10 into 100 because normal rate of return is 10%. So 4,40,000. This is the total value of the business TVB. Now, third step, calculation of goodwill. What is the total value of the business? 4,40,000. What is capital employed? 4 lakh rupees. Where? It is given here itself in the beginning. Correct? It is given here. See, the cursor movement, it's very important. So now you get value of the goodwill is 40,000. That's it. Okay. Please do revision. Comment everyone on my YouTube channel and send the valuable feedback quickly. So spend hardly 20 minutes. Read, write, revise, and make sure each one completely watch the video and spread across. And I've been asking you students to get at least 10 friends of you to my YouTube channel to subscribe. Unfortunate thing is that not even a single student has got the new subscribers to this channel. Once again, I am appealing everybody, see to that today itself, each student get minimum 10 new subscribers to my channel. This is Suresh Babu, thanking you all for watching and making use of this wonderful video. This is Suresh Babu from Government State College, Gauri. Thanking you.